Welcome back, Smash Property Podcast. I'm Nick V, Director of the Smash Property Buyers Agency. This episode, we're going to talk through why most investors never reach financial freedom. This is going to be a juicy topic, lots to unpack in this episode. Hope you guys are well, and let's just dive straight into it. Now, running the buyers agency, we do have the luxury of speaking with a lot of different investors. Most of them never really get past one or two properties before coming to see us, and that's not because of the market. It's largely because of poor strategy that gets people stuck. It's poor strategy, it's poor structuring, it's emotional decision making. Financial freedom requires a property portfolio that is going to be largely funding itself and then compounding over time. And most people don't get set up for that. So this might sting a little bit for some of you out there watching this, but this is what you've got to hear. If you're serious about being a property investor and you're serious about achieving that financial freedom goal you've got, regardless of what the goal actually is, this is going to be one for you. Now, statistically, according to the ATO, the tax office, 80% of investors get stuck at two properties. So there's like 2.2 million investors in the country. 80% of them don't get past two properties. And like I said in the intro, it's because of poor structuring, poor planning, poor strategy, poor financing. And we've got to ask ourselves the question, if property builds wealth, why do most people fall short of that? And the first part of it is they just buy the wrong property, right? So they chase the wrong market. I've seen this so many times. You get investors that, Perth is a good example recently, right? Perth market had jumped. It had done its thing. We were in there, as the market was rising, it was all good. But what a lot of investors then see is the market has risen and then they want to jump in and get into the market because of FOMO, right? And then they were coming to us saying, I want to buy in the Perth market. And we were like, Perth is done, man. Like there's nothing left in there for you. You're not going to get 20, 30, 40, 50% growth now because that's done. Right. And then they buy that peak of them. I had so many people that I was like, I'm not buying in Perth for you. And they were like, screw you, Nick. I'm going to go and do it myself. And they bought at the peak of the market. They will get some growth over the long term, but not the 20, 30, 40, 50% that they had seen and thought they were going to get, right? I had lots of people that go off a friend's tip. Hey, Nick, I want to buy in this particular area because my friend did it and it's done really well. I'm like, okay, well, when did your friend buy there? Well, he bought there 10 years ago. Well, you probably should have bought there 10 years ago as well, right? Or the media hype. We see that quite a lot because people just don't know, right? Like a lot of people, you're busy doing your thing. You're busy working. You're busy with your life. You don't necessarily, property's good for you in the sense of building wealth, but you just don't necessarily put in the time, and we just go off the media headlines and hype and all that sort of stuff and end up buying and making decisions based on that alone. Now, if you don't have an alignment between your strategy and property, you're going to get stuck. So a lot of people will either end up they'll go down the growth path, buying these blue chip markets or whatever when they can't afford it, buy the property, and because of the cash flow situation of the property, it's costing them so much out of pocket every year. They can't afford to either buy more, or worse, they just can't afford to hold the property, and then they're forced to sell, right? And then they get turned off property investing, and then just like, no, it's too hard. I don't earn enough money. It's not for me, and then they don't do it. Or they go down the route of I just want cash flow, right? Cash flow is my thing, and I don't want the property to cost me any money. I want it to put money in my pocket. Now, the reality of a cash flow positive property in 2025 is just few and far between, particularly when we're talking just about freestanding houses. You can probably get a positive cash flow property that might be a unit, maybe a townhouse, or maybe a house in a very isolated location. You can probably do that. But the reality of you then being able to use that property to go and buy another one is going to be very, very slim, because generally speaking, those properties that are positive cash flow from day one don't have a huge amount of growth. Now, the reason I can say that is there is a balance between a property A property that increases in value and has good growth potential is likely going to have a lower yield. Why? Because those properties are going to be in higher demand areas and the rents haven't quite caught up yet. Now, the properties where you find them that they're positive cash flow, they just have a lower price point, right? And a higher rental yield. And that's how you get that positive cash flow outcome. A property, just because it looks good for you doesn't mean that it's actually going to be good for you. Now, I know there's other examples of, co-living or NDIS or those styles of investment that sometimes promise positive cash flow. But if you follow any of my stuff, you know that I'm not a fan of any of that stuff, because every investor that I've spoke to that has done the co-living or NDIS or whatever has just been stuck. And there's a couple of guys that have reached out that are hemorrhaging cash, $10,000+ a month after having done this co-living shit and just been stuck. So not saying that stuff doesn't work. You just don't buy into the marketing stuff. Like, actually sit down and go through all of the numbers on completion once these builds are complete to work out what your situation looks like. So most investors just go into it and they buy the wrong property from the jump because they just don't put a plan and a strategy in place. They just chase the wrong thing. Now, talking about a plan and a strategy, how to actually put that together, because it's not just, I ask investors this all the time. I'm like, okay, well, what are we trying to achieve here? What is your specific driver for buying property? And in 95% of cases, people just don't know. They don't put any thought into it because they just like, oh, well, like I just want to grow my wealth. I just want to be rich. I just want to, grow my wealth. Yeah, cool. That's fine. Why though? What is it? And you dive a little bit deeper into it. Sometimes it's you want to leave the job that you don't like. Sometimes it's you want to set your kids up. Sometimes it's maybe, hey, I like working. I just want to work less. Maybe, a couple of days a week instead. Maybe it's because I want to use property to then leverage and buy into my own occupied property. Work out what that specific goal is for you. And then we can start to formulate a strategy based on that. So most investors just start with like, oh, I just want to get into the market, right? I've heard the market's, it's a good thing to do and I should just do it. And then they don't have the clarity, and then they go down the path of just getting into the market and just buying whatever because they're in the market. And sometimes they get lucky and they do well out of it. And sometimes they don't. So let's look at what the end goal can look like for you. Now, generally speaking, the end goal is going to be one of a couple of things. You got your emotional reason why. Like I said, it's the leave the job, set the kids up, whatever. But it generally boils down to having a specific net passive income that you want to get. So you can replace your income from work if you want to leave work. Maybe it's you just want to supplement your retirement a bit more. So we've got to understand what that number actually is. Is it 50 grand a year? Is it $500,000 a year? What is the income for you? So that's probably the option one. Option two would be maybe you want to start your own business. Maybe you want to buy your owner occupied property. You're going to need a certain amount of cash, right, or a certain amount of equity. So one is you're going to need some certain amount of income, and you want to know what that is. Maybe you're not fussed about the income, and you might need, hey, I need $2 million to go and buy my owner occupied property, or hey, I want $500,000 so I can go and set up the business I've always dreamed of. So those are really the two things that it boils down to. So we've got to work out what those numbers actually are for you. So that's number one. What is that number for you, and which one of those numbers is important to you? Number two is, what is the timeline for it? Hey, I want to leave my job in the next 10 years. Or hey, I want to buy my owner occupied property in the next 10 years. Hey, in the next 3 years, I want to set up my business. So understanding what that plan, the timeline is, and from there, we can then work out the exit strategy. All right. So if it's 10 years from now, you want to exit your the job that you currently have, that's how we can work it out. Okay, cool. This person needs $100,000 net passive in 10 years' time. Okay. That way, then we can work out a plan on how to get there based on where your starting position currently is. So you're not going to build financial freedom by just randomly picking, properties and purchasing them over time. Like I said, you might get lucky and you might be able to sort of wing it, to a certain degree. But I've never seen an investor get past, one or two properties. Actually, I saw a guy, to be fair, he got to 4 properties, and then he was just absolutely dead end stuck. And the only reason he was able to get to 4 properties is because he had a decent income where he could support the debt levels that he was taking on. But then it got to a point where he was just hemorrhaging so much cash, he couldn't move forward. He couldn't buy any more properties. He was stuck in his job that he didn't like. And there was no real exit plan, no exit strategy. The only way out of that situation is to actually start selling down some properties and starting again. So you kind of just lose all this time. The saving grace in that scenario is he bought in some reasonably good capital city markets, and he walked away with a bit of a profit. So not a total loss on that one. So that's kind of how we sort of how you can move forward with a plan and a goal to make sure that you buy the right properties. Now, the next part of where why most investors don't ever reach financial freedom is because they get stuck financially. And this is maybe just a segue from what I was just talking about there. So if you've got a property that has very poor cash flow based on your specific income, it's going to be hard to hold, and it's going to be hard to borrow again. Now, this is where a lot of people have been asking us recently, actually, about should I buy my own occupied property first and then invest, or should I invest and then buy my own occupied property? My answer is always, what is your goal? I always come back to that, right? Because maybe your goal doesn't require you to have, 3, 4, 5 properties. Maybe your goal only requires you to have 1 property. And therefore things might be a bit different. But the reason why I would always steer towards investing first is because I learned the hard way of buying an owner-occupied property first and then investing. And what that did for me was my owner-occupied property soaked up all of my borrowing capacity, and then I was not able to invest. I had to go and earn more income and increase my income over time so that I could unlock more borrowing so that I could go and invest. What that did for me was it slowed down my journey. I missed out on the opportunity cost of not being able to buy those investment properties when I could have. Hundreds of thousands of dollars of lost opportunity cost in that time. And so if I had my time again, I would probably still be renting to this day. And I would have my portfolio, I probably would have had maybe another 3, 4 properties on top of what we've already got. And so that's just, I didn't go into it with the right plan and the right strategy. At the time, I was like, I was renting for years and years and years. And I was like, I just want my own property. I'm sick of landlord. I'm sick of property managers. I'm sick of inspections, every 3 to 6 months. I just wanted a garage for my cars. And that was kind of it. Oh, I wanted a garden as well. That was my own. Just all these silly things, right? But it just didn't stack up. But I just didn't have the knowledge I've got now, obviously. So if you're out there and you're kind of in that zone, do I buy my house and live in it, or do I invest? I completely understand where you're coming from. But if you're serious about property investing and you're serious about having a good crack at it, I would highly encourage you to do the rent vesting thing. Rent where you want to live, invest where you can afford. You will thank yourself for it in the next sort of 5 to 10 years. So just back to investors getting stuck with poor cash flow. We've all just sort of seen it in the last couple of years, right? Like there was a huge spike in the interest rates we're all paying. That increased the cost of holding a property exponentially, right? I don't have the numbers off the top of my head, but I'd be very comfortable in saying that probably doubled the or more the cost of holding the properties that I had personally. And a lot of investors panicked when interest rates started to rise. If they've bought in specific areas, maybe vacancy rates start to take a little bit of a hit, particularly during the COVID era. A lot of people sort of went back home and that sort of thing. And, a lot of these blue chip areas weren't so blue chip anymore. So this is why, you've got to before you buy anything, and this is why for investors that we work with, I love to look at the cash flow of the property so I can understand the investor that's going to hold it and go, hey, based on your income, is this something that you can actually afford to hold? Because if the answer is no, then we need to look at another option for you, right? And so if you don't have a strategy to, I guess, use this next property you're going to buy to then fund the purchase of the next property, you're just going to hit a roadblock and you're going to end up like the statistic of all the other investors that get stuck at one or two properties. So if you can't hold it, you can't grow it. I think it's probably a good sort of thing to think about in your head before you go out there and buy any properties. Before I get any further, if you're getting some value out of the video, appreciate it if you could like the video. It does help out a lot. And if you haven't subscribed, consider it. If this is something that you like hearing about every week. Another reason why investors don't get to financial freedom is because they get emotional about their property buying journey, and I totally get this one. But buying emotionally because an area might, feel familiar, you might like the area, it might feel safe to you, is a surefire way that you're just going to get stuck at one or two properties. I've turned away investors where they want us to buy in a specific area, and I'm like, just because you like the area, I'm looking at the numbers here, man, and it doesn't add up. Like the vacancy rates are high, or the growth ain't there, or there's no real indicators to tell me that this area is going to grow over time and give you what you're actually looking for. So just going off what your emotions are telling you when you're dealing with your hard-earned money is a guaranteed way that you're going to get stuck. Now, if you're sort of, I'd say passive, but like if you're kind of an investor that's waiting for the perfect time to do something, maybe you're investors waiting on the market or waiting for the interest rates to come back down. The perfect timing never exists, and I've said this a million times before. If you're just waiting for the perfect time, you're just going to keep waiting because there's never going to be a perfect time. Like just looking at my journey, there was never a perfect time to buy a property, right? I was aggressive in certain time periods for me buying property, and it was like I remember every time I got a little pay rise or a bonus in my job, I'd be on the phone to my broker being like, hey man, how much can we borrow now? Can we go again? A lot of the times the answer was no, but I just kept pestering him. Every time I kept pestering work to give me more money, more pay rises, and kept working hard to get it. And super aggressive with being able to do it. But if you're kind of passive with it and you're kind of waiting for the perfect time and the perfect moment, you're just going to be there forever. And you're going to be stuck doing things that you don't like doing or not doing the things that you want to be doing. Overanalyzing. I've seen this quite a lot. Property investing tends to attract, a very analytical mind, and there's lots of data points you can sink your teeth into with property. I've said this before. Data is a good indication of what has happened, but it doesn't tell you what is going to happen. So you can look at data all day long, but it's not going to give you all of the confidence you need to go and buy a property. In fact, nothing will really. It's just there's the data. The data is not going to eliminate a risk, right? There's always going to be a risk. But if you never act, if you're waiting for the perfect time or you're waiting for the perfect data set and you never act, obviously you're never going to achieve the goals that you want to achieve. So you've got to be proactive with your property investing journey and think of it like a business. Right, if you're starting a business, you're in business. You're probably gonna invest money into the business in the first couple of years, and you're probably gonna be running at a loss. It's typical with property investing, right? But just like you start a business, you'd have a business plan, and you would be like, okay, well, we're gonna invest money over this period of time. We're gonna do these things in the business to help the business grow. We're expecting the forecast of the business to look like this over time. And then by year 2 or 3 or 4 or 5, we're going to expect to start making money out of it. And then, hey, maybe we can then grow the business. Maybe we can then, use the business cash flow to start a new business. It's the same concept. So treat it like a business and not like a little side hobby on the side. And I guarantee if you do it that way, you're going to be far more successful than the average person when it comes to property investing. Another reason I see why people don't reach financial freedom when it comes to property is that they don't review their performance, right? They don't restructure loans where need to. They don't maybe refinance. They don't adjust their strategy. They don't pivot. I've got a couple of properties, I'm good. And for the most part, it is good because if you buy the right properties and you hold them for a period of time, you're probably going to do really well out of it. But what I found in my journey is what's good for me now wasn't good for me 5 years ago, right? So, and what I mean by that is, 5 years ago, I was in the I guess building the foundations of my portfolio today, right? And at the time, building the foundation meant that I did need some properties that had nice growth because I needed the equity. And at the time, I was working at the bank, so I had a decent income where I could afford to hold the properties, and it was good. Now, at that time, I was doing forecasts 5, 10, 15 years ahead of time to go, okay, I'll hold these properties now. They're going to cost me a bit out of pocket today, but as time goes on, as the rents start to increase, the holding cost of the properties will start to diminish, and therefore I will be in a better position 5 years from now where, I'm able to leave my job, which I was able to do, able to start the business, which I love doing. I knew when I started the business, I'm not really going to have much income personally because I'm going to be reinvesting it into the business to help it grow. So at that time, I'm not going to be able to really hold these properties. So I need them to get into a position where they can essentially pay for themselves. That's building a strategy. That's building a plan out so that you can make it work. And there's been multiple times where I've refinanced to better lenders, maybe better rates, and now I'm adjusting my strategy. Right in the last few years, really, I've adjusted my strategy from high growth properties in high growth areas to more balanced properties, and in some circumstances, properties that are fully taking care of themselves that sit inside of discretionary trusts. Right, so your strategy and plan, just as you grow and evolve and get older as a person, your strategy with property will do the same, right? Because what's good for you now probably won't be good for you in 5, 10, 15 years. So this is why I'm saying you've got to optimize and review where you're at and kind of where you're going. So you sort of know, all right, in 5, 10 years time, that's when I want to leave my job. What do I need at that point in time? And then just kind of work backwards to do it. And a lot of people, like I just said, they will buy a couple of properties and think it's done. And they'll assume the job's done. But the true freedom, if you want, and I know a lot of people that we work with, it generally comes down to they need a passive income to replace their job, right? For the most part. Now, that's generally going to take somewhere between sort of 4 and 6 properties for most people. Four of the right properties can get it done, but it's not going to be 1 or 2, right? So this is why having that plan is going to be really important. So you want to buy the properties, you want to hold the properties, you want to review them, you want to optimize it, and then you just repeat that process over and over until you actually get to the goals that you're really looking to achieve. So the average investor really just stays stuck because they think short term. Right, a lot of people right now, rates were high, they're starting to come back down now, but a lot of people were like short term, like I need a positive cash flow property now. It's like, yeah, okay, I get it. I get why you're saying that, but what's the reality of that look like in the long term? How is that going to serve you in the long term? All right, so financial freedom, it takes a clear plan, it takes the right assets, and it takes the right team to get the job done. So you don't have to rush into anything here. You do need to move deliberately through the maze of property, right? and everyone's journey is going to be different. And this is why I'm very big on, I don't have any off-the-shelf plans that I just go, oh, okay, this one is fit for you. I have some frameworks that we might use for different investors, but everything is tailor-made to the specific investor because everyone has a different goal. Everyone has a different starting position. Everyone has a different income. Everyone has different timelines. And so having a bespoke plan for you is really, really critical. Now, if you need help putting that together, you want to sit down with a broker, with myself, with my team, and sort of map that stuff out. This is what we do, and this is part of the job I really, really love, is because if we can set up the right strategy in the beginning, based on your specific circumstances, it's like a plane. You're taxiing to the runway, and you start to put the thrust up and then start to take off. It's really, really enjoyable for me to see. So if you need help building a strategy that actually gets you towards financial freedom, that's what we do, and we obviously help you go out and buy the properties as well. We do have a good team of brokers, accountants, etc. that can help from that perspective. That's not my department, but we have some people that we can put you in touch with as well, because the whole ecosystem is important for you to really just take off and go to the next level with your property journey. So I hope you got some value out of that and just kind of understood where you might need to have your mindset for your specific journey so you can achieve the outcomes you're looking for. And really why most people get stuck now, it's just the reality of it, right? There's a lot of property investors out there. I'd love for you watching this that you can actually listen to our content and take yourself to the next level. So whether you're doing it yourself or whether you need help with it, appreciate you watching the video and taking the time to digest all the information. If you got some value, appreciate it if you could like the video, consider subscribing. If you need to reach out to us, all the details are in the description below. It doesn't cost you anything to have a chat with us, but it does to do business with us. No, well, I'm not running a charity here, man, but hope you got some value. Appreciate it for this week. Until next time, thank you so much for watching. I'm Nick V. I'll catch you soon.